Hello, everyone. Thank you, everyone, for joining us today. So we are about to start. If you want, and if you can, leave in the chat where are you from and from where are you watching us, so we get to know you better. And also, if you can answer the poll that should appear on your screen, so we get to know you better and we know if you are already an existing Real Estate IQ subscriber and if you would like to have a one-on-one consultation of our services together with a free demonstration of our tools. That would be amazing. So welcome everybody. For the ones that haven't heard of us before, we are Real Estate IQ. We are so happy to have you here today. So let's get started. We have more than 500 webinars hosted, more than 12,000 registered attendees, and more than 100 keynote speakers. So let me tell you a little bit about who we are. We are a lead generation software and solutions company focused on helping real estate investors kickstart their businesses. So we strive to become the platform and resource to help them achieve their real estate dream. So what do? We provide real estate solutions to make deals come true. We offer a suite of lead generation automation tools, educational content, and additional services to the real estate industry to help entrepreneurs kickstart and grow their business. So if you think that this is for you, we expect you on our website. This is the streamline of our solutions, the solutions that we provide for you. We offer off-market leads to find the freshest data mine straight from the card houses daily on our data portal. We also have a site for events, re-education led by experts and training on our solutions. Skip tracing, get homeowners contact information effortlessly. CRM, perfect to track listings and marketing campaigns. Virtual assistants, virtual support for administrative tasks, customer service, and more. Fire, personalized financial checkups and consultancy. EVA, run real estate comps in seconds with our renewed evaluation CMA. CLM, we now provide custom off-market data mining all over 50 states. And last but not least, the membership tailored plans to meet every investor's needs. So this is the deal of the day. Today, we bring you this golden lead to grow your business. So you can contact us to learn more. You can also scan the QR code that appears on the screen and also sign up to get the full address and submit your deals to advertise. You can also join us in our newsletter so you can get the weekly updates. You can stay informed with Real Estate IQ's weekly newsletter, get market insights, data updates, and event highlights. All you need for successful real estate investments. So don't miss any of our weekly webinars like this one by scanning the QR code that appears on the screen. And also we have in-person events. You can also get a free demonstration. You can request a consultation, a complimentary 30-minute in-depth one-on-one demo of Real Estate IQ's solutions with one of our experts. We'll walk you through everything you need to know. For more information, you can contact Bracelet at realestateIQ.co, answer the poll that should appear on your screen, or also scan the QR code. These are our social media accounts where you can follow us as well. So we are in Instagram, Facebook, YouTube, and LinkedIn, and you can use the QR codes that appear below of each icon so you can join us in our community so you won't miss any of our news. This is the Academy Learning Made Easy. Here you can find our best webinars and short courses so you can stream it at any time, and from wherever you're based, you can log in to stream. We have Ravi talking about private money updates. I'm going to tell you just a little bit about him. He's a knowledgeable loan concierge at Blink Lending. He has more than 10 years of professional experience helping homebuyers in Houston and throughout Texas. Passionate about helping others, Ravi enjoys cultivating relationships with his clients by assisting them to buy their dream homes or putting them in a better financial position. Whether purchasing a new home, refinancing, or simply trying to understand your finances or industry jargon, Ravi can help you find the right mortgage. So thank you, Ravi, for joining us today, and thank you everybody for attending. Before moving forward with him, we have Ria from our sales team doing a short demonstration of the portal. Thank you, Ria.
Thank you, Maria. Good morning, everyone. Again, my name is Ria. I'm one of the account managers here at Real Estate IQ, and it's my pleasure to walk you through our portal and how it can benefit or how our solutions can benefit your real estate business. So let me share my screen. All right. So here is our website. It's realestateIQ.co. So as I believe that you have already seen this one, and here are our solutions or the services that we offer. We do offer off-market leads, skip tracing, custom leads mining, virtual assistants, and evaluation CMA, as what Maria has mentioned already a while ago. And I believe that most of you are interested with our off-market leads. So let's click on that. And here are also our, let's just wait for that one to load. And if you're interested with our off-market leads, we do offer different listings. So it will include, all right, let me scroll that down. All right, let me, sorry about my internet. It's just slowing it down. All right. So we have these different types of lists: pre-foreclosure, loan modification, lease pendants, probate, tax sale, eviction, and among others. So if you wanted to view the county data that we have, you can just click on this view county data here. You can visit this one um, later on, and yeah, we do offer off-market leads across Texas, Florida, Utah, and Georgia. And also we do custom leads mining throughout the 50 states in the US. So let me walk you through our portal. If you have signed up for our membership, or if you have made already your account with us, just click on Access Portal. If you don't have the membership, or if you're not signed in, or if you're not signed, yeah, you did not sign up yet, it will look like this one. So you need to sign up. All right, so create an account, or if you have an account, just click on sign in and log in. So this is what it looks like. So this is our portal. Let's just wait for a second. All right, so this is our portal. And on the left side here, under Home tab, we have the off-market leads. So let's check here. So we have all of these listings, as what I have mentioned a while ago. And the details that you can see in here will depend on the subscription that you have. So let's say I will go to the subscription or the plans and pricing later on. So let's just say you're interested in Texas, Allstate. You can filter this by city or county. You can, but let's just skip that one. You can filter also through or by property characteristics, square feet, year bill, bedrooms, how many bathrooms also the property has. Also, you can filter by date filed. So you can see here, you can filter date added, the data has been uploaded in our portal. And also you can filter by auction date. So let's just say you're interested with April 1st. until April 23rd. Also, you can filter, by the way, through record date, when this was filed through the courthouses or in the county recorder's office. You can also filter by occupancy if it's owner occupied or not. So just click on apply and click go back. So it will show you all of this uh, leads, and you can custom this one by like, you can also click on if you wanted to see 100 leads at a time. So there you go. All right, so let's check on one property here. By the way, you can also click on, or you have the option to mark a property as your favorite. Under favorite, click on the star. Let's check one property in here. All right, this one. So if you wanted to know more about the property, just click on details and it will show you all the details in here. So again, the details that you will see will depend on what subscription you have with us. We have premium and we also have standard plans. So if you have the premium plan, you will get all the data in here. There is not much in here, but we promise you that we are giving you 5 email addresses, 5 cell phone numbers, five phone numbers. So as what you can see in here, there is not that much information. This is what they have provided. So again, if you have a premium plan, you will be able to see 5 email addresses, 5 cell phone numbers, and 5 phone numbers. And but if you only subscribe to our standard plan, you will just see this data until or up to here, up to lead type. So yeah, that means the skip trace data is not included in standard plan. So let's all right. So again, this is our pre-foreclosure leads. We also have the probate, earship, tax sale, among others. So we also in our portal you can contact us, the customer service. You can contact our team, you can create a ticket, and if you have problems or doubts, you can just create a ticket in here, and um, we can assist you as soon as possible. So we also have, here is our plans and pricing. So as what I have said a while ago, you can have the standard or the premium plan. You can go for a monthly, quarterly, or yearly. And by the way, we will be changing the plans and pricing by May 1st. So if you wanted to subscribe, you can still get this you can this get this pricing only up to April 30th. Am I right? Yeah. So also we have here your FAQs and everything that you need to know, like how do I get started and how often are leads updated. So your questions will be answered in here. And we also have the academy, as what Maria have said in here. So these are pre-recorded trainings and webinars. These are um, different from the events that we have on our website. So, yes, that would be all. Thank you for listening, everyone. And if you have questions or you wanted to know more about what I have presented, I believe that after this demo, I mean, there would be a pop-up message, I mean, prompt message that will appear on your screen if you wanted to book for a one-on-one demo consultation. So thank you, and back to you, Maria.
Thank you, Ria. You have a question that you can answer already in the chat box. Sorry, in the Q&A box. And by the way, I take advantage to suggest everybody to use the Q&A box and the chat box to ask Ravi all the questions that you may have. So thank you everybody for attending. Moving forward to you, Ravi. Hope you enjoyed the webinar.
Awesome. Thank you, everybody. Yes, my name is Ravi Kaku. I am a loan officer with Blink Lending and Investments. We are a local mortgage broker, both a direct hard money private money lender and a traditional conventional FHA VA lender as well, that we can lend all over Texas. So what I'm going to be going over today is our private hard money loans, giving you guys a few industry updates, and then going through a case study of a closed client, just to kind of give you an idea of how we underwrite private money deals, how it looks to go through a process of acquiring a property, rehabbing it, and then in this scenario is a fix and flip. So I'm gonna go ahead and get started sharing my screen. Last time I forgot to share my screen, so I got to make sure I do it this time. Awesome. Can everyone see that? I'm hoping so.
Yeah, perfect.
Okay, awesome. So yes, title of the presentation: When banks say no, we say yes. Essentially, private hard money loans is non-traditional financing that is mainly common sense lending compared to traditional lending, where you have to go through this kind of the scrutiny of underwriting guidelines. So the first thing to really know when you're looking to purchase investment properties, whether it's through a private money loan, you can also acquire it through conventional financing by putting 20% down, 25% down. And then there's also non-conventional, where it's based off of property income underwriting, essentially. So whatever the house will rent out for, whether it's through a purchase or a refinance, there's another loan program that you can qualify for long-term financing without your own personal income. So the main questions that we always kind of go through with clients is, what is your acquisition power? How many properties can you buy right now based off your assets, debt to income ratio, or if we wanted to throw out a debt to income ratio, we can also look at property income. How many properties can you buy in the next 12 months? How many over the span? How much are you looking to acquire? Whether it's into your name, your spouse's name, how much are you guys looking to acquire in total? So yeah, are you married? And if so, does your spouse want to buy investment properties? Because there is a strategy to where you can acquire 8 to 9 properties under your name, and then your spouse can buy it separately, as long as neither of you guys own title on each other's homes, can buy another 8 to 9 properties. Is there a sphere of influence that you can tap into, meaning private money or individual acquisition power, that you can get individually without having to go through someone like me, a broker or a mortgage lender? And then, are you pre-approved with an investor-friendly lender? This is important because you want to be able to be approved by someone who understands what it is to be an investor, and make sure you have the ability to acquire these fix and flips or rehab properties and refinance out. So like an example, and this is not a knock against anyone, but being approved through one of the big banks doesn't really make sense because they don't originate private or hard money loans. They don't have other non-traditional financing options, that even if you were to acquire this property, how would you be able to refinance and keep the property long term? So whether that's with us or with any lender, you just want to make sure that they're investor friendly, that they have the ability to know all the different loan options there are, and they're not just stuck with like conventional financing only. How does credit score impact your financing? So there have been some changes with credit scores. It used to be where if you had a 740 or above, you would get the best rates. Now it has turned into 780 or above gets the best rates. And then it kind of goes down every 20 to 40 points, of course, based off of your down payment or loan to cost or loan to value ratio. So 740 to 760, 760 to 779 will also get you excellent rates, but there is slight price differences every 20 points or so. 700 to 739, 680, 699. This is just so you can still qualify down to 620 for any of these financing options. But of course, every 20 points that you can get your credit score higher would get you better financing. Now, the one thing to know is if you're qualifying with a co-borrower, with your spouse, let's just say you happen to have a 780 credit score, but your spouse has a 640. Just know it's going to be the 640 is going to be used for qualifying purposes. We can't just use the higher score. It's always going to be what are the two middle scores between you and your partner, your co-borrower, and the lower of the two is used for qualifying purposes. So this has been a big change in our industry since last year, is that 740 or above used to be the best interest rates. Now it's 780 or above. Another huge update for investors mainly is cash out refinances. Typically, when we would lend to a client that was doing a rehab property, they would rehab it, fix it up, and be on title for at least 6 months. And then I would be able to do a cash out refinance for them to take some of the equity out of that future higher value now. Fannie Mae, both Fannie Mae and Freddie Mac have changed those seasoning requirements that you used to have to be on title for 6 months. Now it's required to be on title for 12 months. But this is for conventional financing. There is another option, the rental income loan program. You are able to get it out between 3 to 6 months. So that's still an option to get it out sooner, the equity. The only disadvantage with those type of products is the interest rates are going to be about a point, and cost will be a little bit higher compared to conventional loans. So if you are able to qualify conventionally, that's always the best route to go for the initial 2, 3, 4 loans, because you're going to get a better rate. But in this scenario where you're looking to take the equity that you built into the home, in a recent acquisition, going to that DSCR loan would be best instead of going conventional. But again, if you've already been on title for more than 12 months, you have a free and clear property, you're looking to get started in investment purchases, you can still cash out refinance on that up to 75% conventionally, take that essentially what we call debt equity, and then put that money to work to acquire more properties or invest in anywhere else that you see best for you. So yes, to to get started, there is a difference between private money versus hard money. It is essentially the same product, the same vehicle. It still helps you acquire a rehab property, rehab it, and then either refinance or sell it. But the main difference is hard money is the older term where it came from, being lent onto a hard asset, which is a property. We consider ourselves more of a private money lender because we are raising our funds privately. So we're not going to Wall Street, to big banks, to hedge funds, life insurance companies, anything like that to borrow our lending capital. We raise it individually. So we go to individuals that have money in retirement. They have a SEP IRA, self-directed IRA, and we say, hey, we have a first lien note available for sale. So you're not putting your money in a pool. We're not collecting the money in a fund. You are literally purchasing a first lien position note that we've just done a loan for. So since we are able to raise our money privately in that way, we have a lot less cost and overhead that we are able to pass down to our clients and less junk fees, which I'm going to go over here in a little bit. But yes, we raise our money privately. So even if you're necessarily not interested in acquiring properties, or you have gotten to the point to where you'd want to have passive income, feel free to share your email address with me, and I can add you to our private lender distribution list to where you'd be able to purchase real estate notes from us. This is anywhere from 6 to 12 months, earning 7 to 8% interest annually, just to give you a quick feedback on that. So why do people use private money or hard money loans? The number one reason is speed. A lot of wholesale deals, a lot of pre-foreclosure deals, everything needs to close very quickly. So just for an example, I got a deal last Monday. They needed to close very quickly. It was a wholesale deal. So as long as we got title, insurance, a property survey, we had all the client documents, I was able to actually turn that around, get the file clear to close on Thursday, and close the clients on Friday. So 5 days is typically the fastest we can get things closed on the private hard money side. You want to use leverage. So essentially using all of your money, like buying properties cash. Yes, cash is king. That is always the best way to go. If you have, 100, 150,000, you can purchase it, rehab it yourself. That's great. You're not paying anyone's interest. You're not paying any closing costs. But for the people that want to kind of diversify their funds and not put all their money into one property, you're able to leverage by using other people's money, meaning borrowing our private money funds to not acquire just one property, but maybe two properties at the same time. And now you're getting more acquisition power by using other people's money. Protection. So this is another layer that we would be a second pair of eyes for you because we're underwriting the deal. We have an in-house appraiser that's helping us determine the ARV that we're basing the loan off of. So what you do by borrowing the funds from us or any kind of lender is you're having another set of eyes look at the deal to be like, hey, is this a good deal? Or do we see any kind of red flags or anything wrong with it that we'd be able to share? Now, at the end of the day, this is not to tell you not to acquire the property. It's just to give you a second opinion on what we're looking at when we review and underwrite the file. This one's a huge one, property qualification. Of course, if the property needs major repair or is in distressed status, no lender outside of a hard money lender would be able to lend to it. So you would have to use private or hard money to acquire this type of property and get your rehab funds 100% included in the loan. Borrower's qualification. Again, private and hard money loan is more common sense lending, as you can say. You're not having to fit into individual boxes, credit, income, assets, things like that. There's other ways that we can get clients qualified to be able to purchase distressed properties. And of course, the biggest reason is you're able to utilize the equity. Typically, we'll lend up to 70-75% of ARV based off that future value. Whereas if you were buying a traditional turnkey property, it would just be based off of like 20-25% down. You're not able to use what that future value might be down the road. Sorry, I thought I saw a question, but I don't know. Oh, sorry. So going to the next one. So this is our big kind of lender, private money lender questionnaire. You can utilize these questions, whether you work with us or not, to talk to any hard money or private money lender. Is that these are the typical questions you'd want to ask because these are the differentiators between each company. How long are your loan terms? 6 to 24 months. Do your loans have any prepayment penalties? Meaning if you're doing a fix and flip, and if you can get in there, you have a team that can get in and out in 2 to 3 months. Are you having to pay the remaining 3 to 4 months in a loan? A lot of this has gone away, but it is still good to ask for prepayment penalties or minimum interest paid. Do you charge extension fees? One thing that's different from us than everybody else is that if you have a 6-month loan term, let's just say the house just takes an extra time to sell because of where interest rates are these days. We offer 2 free months for free as long as all the payments have been made on time. So instead of having a 6-month loan term, you technically have 8 months. And then we would have to look into extension fees if it takes longer than that. Is there a draw schedule or any escrow holdbacks? That's a no for us. How fast do you disperse a draw request? If you send it in to us on Monday with pictures, videos, our draw request process, we can typically get it out to within 3 to 4 days. Just to kind of share another secret for us, we aren't able to charge clients interest on the undrawn rehab budget. So of course, if you're going to request a draw from us, we're going to want to release it back to you as soon as possible. So we are able to collect interest on that money. So it incentivizes us as the lender to get you your funds as quickly as possible. We don't have any wire fees. We don't have any servicing fees. There's no loan payoff or to generate a loan payoff fees. And the biggest thing with us is, do we charge interest on the undrawn rehab budget? That's a no for us, meaning if your loan amount is 150 and your rehab budget is 50,000, we're going to set that 50,000 aside and you're only paying interest on 100,000 from day one. So you start off with a lot lower of a payment. And then as you request draws through your process, as you're rehabbing the property and you're adding 15, 30, up to the 50,000, that's when it's like a credit card. As you use it, you pay interest on that rehab budget. And up until the 4th month mark, this works. And then at that 4th month, we charge you the full loan amount. But if you, again, this is for the smaller rehab budgets, especially, or even huge rehab budgets, you're saving a lot more money by having that lower payment up front and then just slowly gaining interest as you're taking draws out. So another strategy to even use with this is that let's just say you have a rehab budget for 50 and you can front that full amount without having to ask for a draw request. You can complete that full $50,000 worth of rehab and then request that money at the very end as you list the house. So then you don't pay interest on it for the first 4 months, which of a lot of clients have gone that way just to save interest payments. This is our private money loan formula. You guys can take a screenshot of this. This is how any lender is going to kind of determine how much that you're going to be able to borrow on this property. So you'll just take a piece of paper, you'll draw a line right down the middle. On the left-hand side, you're going to write money that you need. Right-hand side is money that you can get. So then you're going to write purchase price, rehab, closing cost, uh, as kind of a calculation. So in this example, purchase price is 200, rehab is 50. I always just use 10,000 as a round number just for the sake of this exercise, for closing cost. So the total amount that you truly need to acquire this property is 260,000. Now you go to the right-hand side of that column, money that you can get. So you would write your ARV. What do you believe is the after repair value of this home? It's going to be, in this example, 310,000. So 70% is typically what we'll lend. So you can get a loan of 70% of that ARV, which is 217,000. So then you take the 260, the funds that you need to acquire this property, minus the amount that you can get, and your cash to close is $43,000. And that's taking the two numbers and subtracting it. And that's how you can kind of get an idea as you're driving around, looking at different properties through Real Estate IQ, through any platform. When you're seeing purchase price, rehab, ARVs, this is how you can kind of determine, okay, how much am I going to need to bring on the back end when I go to get a loan. So this is a case study. This was done about a year and a half ago, but it's a really good case study to kind of show you an example of what a client utilized with our loan, the property they acquired, and what they were able to do. This is a after picture after they rehab the full property. So let's take a look at the stats of the home. This is what was presented to us. The purchase price of this home was $335. The rehab budget was $125. They were planning to completely transform the property because it was an older home. I think it was built in the 1940s, and to sell it to a new family. The client came to us saying that they valued the home at $620. When we looked at it initially, we only looked at it. Our in-house appraiser only saw the value at $595 at that time. So what that means is we will only base the loan amount off of our ARV at the end of the day. We gave the clients a 6-month loan term. Usually on a rehab budget of 100,000 plus, we're going to give them 12 months. But the client asked for 6, so we kind of gave them what they wanted. They closed on August 26th of 2022, and they sold the property on February 17th. And you can see they ended up selling it to a cash buyer closer to their ARV. So yes, they were essentially right in the ARV. The market has shifted a little bit. But at the end of the day, it's still a win for them because they were able to sell it for a higher amount. Now, this house could have sold a month earlier, but the buyer was going through financing and fell out. So they had a cash buyer as a backup offer. Sorry. Okay. I'm going to kind of play this. This is going to kind of show you what the house looked like prior. This was the front of the house. This house did have a pool in the back, but this was the back of the house. This was coming from the backyard, coming into it. This is what the kitchen looked like when the client purchased it. You can see it's very closed off, and there's a room back there. And this was the living room, essentially. That little door hallway is the entrance of the property. So you can now get an idea of what the house looked like prior. So again, we plugged this into our formula. Purchase price was $335. Their rehab was $125. The closing cost, because it is a higher purchase price than the rehab, the closing costs were higher at $18,000. So they needed $478,000 to acquire this property. Again, we based it off of our ARV of $595, so we gave them 70% of the $595. So the loan amount was $416. So they ended up having to bring $62,000 as their cash to close. Again, it was just the 478 minus the 416. And that's how they kind of broke that down. And now they still got 100% of the 125 in rehab. They were able to still have that access to that full amount. So essentially they bought a house that needed about 100 or 400 and 470, 60,000 for $62,000 at the end of the day. So client took 2 draws during the rehab process, because remember the loan amount in this scenario is 416. You take out the 125 because we don't charge interest on that 125 from day one. So they're paying interest on a lot lower amount. So they took 2 draws. They took one about a month later, took another one 2 months later, took a total of 88,000. And what this client ended up doing is that they had $37,000 left, and that 4th month mark hit. So we asked them, hey, we're gonna add this 37 to start being charged the full interest amount, or you can forfeit this amount and pay out of pocket. They decided to forfeit the $37,000 because they had a HELOC on their primary home, and they had the HELOC for like 6%. So they instead borrowed the 37,000 from there to finish the project, instead of adding the additional 37,000 to pay on an interest rate of 11% at the end of the day. So you do have that option that you can forfeit the rehab amount to pay out of pocket if you'd like. So the loan amount was 416. The interest rate was 10.99. They did have a 6-month loan term. This is the huge difference that you see, where we don't charge you interest on that 125 initially. Their initial monthly payment was around 2665. That's what they paid for the first month or two. And then as they started taking draws, their max payment came out to 3471. So they were essentially saving about $800 per month as they were have that rehab budget set aside. So for investors, I know the bottom line is very, very important. So we try to match that by not charging that interest on the end. So they were able to save close to like $1,600 to $2,400 by not having to pay interest on that undrawn rehab budget. Now, you guys saw the pictures of prior. This was an incredible transformation. This was the kitchen. You guys saw where they walked in, the kitchen was completely closed off. They tore down the walls, elevated the ceilings, brought brand new appliances, redid the kitchen completely, complete transformation. As you can see here, they added a huge island to the kitchen, made everything wood floors. But the big difference here that really gave the property the most value you could get is they completely tore down the walls and made it an open concept throughout. This was the first picture to your left is if you were to look at it coming from the backyard or the back patio, you can see they took up the ceilings completely to the top, completely took out the fireplace, and yeah, added the wood flooring. In the backyard, they resurfaced the pool area. You can see they added those sliding glass doors, which makes the light come in a lot better for both. The 4 window panel is for the living room. The 2 window panel is into the primary bedroom, and they added those sliding doors. This is what the primary bedroom looks like. Again, they elevated the ceilings, completely redid the kitchen, or not the kitchen, the bathroom, as well as that you can see added the barn door. So aesthetically, also they did an incredible job on here as well. That is pretty much the case study that we did. The client, of course, ended up selling it for that 627 after holding cost, made around $60,000 to $80,000 because they were able to get in and out. It's very rare that you can get a client that has 125,000 to get in and out for this transformation within 6 months, but she did a really good job on it. But that is their case study for private and hard money loans. So I can take any questions at this time. Anything that anyone had any questions, or in general, if anyone has a scenario or any questions for any previous deals that I see Olga's, I'm interested in borrowing private money. I've done several fix and flip new construction deals. Yeah, that's awesome. I got your email, so I'll definitely send you an email right after this and give you our information, our application, and everything like that.
That was amazing, Ravi. Thank you very much. Feel free, everybody, to ask all the questions. Olga asked you something. I don't know if you have
I'm
checked
just writing her.
the chat. Yes.
I'm just writing the email.
Okay, cool. Then we will share the okay. Nashelle is asking, what states do you lend in?
So we can only lend in the state of Texas for our private and hard money loans and conventional loans. For our DSCR, meaning like the non-conventional lending, there's several states that we can lend in, and it's just depending on which state you're in, I would just check with the multiple companies I work with to see if I can lend there. So yeah, for us being a direct hard money private money lender would only be here in Texas. But this is my contact information on this page. So if anybody has any questions that they want to ask, or if they have any scenarios they'd like to run by, even if you're not in Texas and you're looking at another property somewhere else, I'm more than happy to have a conversation and be a resource for anybody.
That's amazing. Thank you very, very much. In case anyone else has any more questions, I guess we can finish this now. We will share the list with you, Ravi, of the
Okay.
attendees. Thank you so much.
Thank you again. And yeah, I appreciate it like always.
Yeah, we really appreciate that you're here with us sharing your expertise. It's super valuable. And thank you everybody for attending. We wish you a very nice day. Thank you. Bye-bye.